Hi guys, thank you so much for tuning in. Welcome to our brand new digital offering, Who Moved the Market? And moving the market with me today is Nigel D'Souza. Well, we're going to talk a lot about the metal space, but Nigel, the idea of this conversation really is to go a little deeper. I mean, there's so much happening in the market, there's so much buzz. Our idea at 2 o'clock every afternoon is going to be to talk about the most important touch point or talking point, the pulse. What the so-called smart money is probably discussing or talking about. And the sector we've picked today is metal. So who moved the market today? Maybe it's the Chinese. Yeah. At least in the metal sector, Nigel.
Well, so we first happy to be on the show and happy to be part of something that is moving the market. So that's great. And the metal index is doing a relative outperformance. So it makes sense to discuss that, right? So a couple of factors playing out here. One is the Chinese. Why? Because the Chinese are talking about stimulus yet again, which is good, right? You want them to push further stimulus into the system. That's what drives price and hopefully demand as well. So that's point number one. The second factor is we got an economic data that did come out, right, earlier today in terms of the home sales numbers out there. And it grew for the third straight week in 16 major cities. So both those two are data points that are coming in from China and hopes of stimulus. But for me, what are the three big aspects or the three critical components for the metal index and for the ferrous stocks? One is the regional steel prices. That is the Chinese steel prices. When we talk about regional prices, it's normally the Chinese. Remember in April 2022, the prices were around $850 per ton. And things were looking very good when HRC prices at that level. Suddenly they collapsed all the way to around $500 per ton. That was in November.
These are global prices we're talking
about.
Global
prices. Chinese regional prices.
Chinese prices, okay. Yeah.
Now that price from around $515 per ton has moved to around $660 per ton, which is very, very encouraging. So from those lows, you've seen a recovery of close to around 25%. Remember, the Chinese are the market movers because they, just to give you a rough number, if India produces 100 million tons of steel, the Chinese produces close to around 800 million tons odd. So it's around 7 to around 8 times of what we produce. Simple. The second factor is Chinese will discuss pricing, or they'll give the base in terms of pricing, but domestic demand has to be strong, and I understand the domestic demand has been very strong.
Nigel, can I interrupt you for a second there? I'm listening to you really carefully. The Chinese are increasing prices. I was reading that apparently big producers like Bauer Steel and even some of the European guys, Arcelor, they've also started talking about price increases now. You're saying domestic demand is pretty solid for steel here. Then why are there reports coming in about some small price cuts in India? And we know, the Q3 earnings season for a lot of these big companies like Tata Steel was really abysmal. So why is that positively not, at least right now, reflecting in India?
So I'll tell you what, Surabhi, there were price increases that took place in January and in some part of February as well. However, the small pullback that we saw last week, but I believe that's got quickly reversed because yesterday and today there is a rough price increase of around 500 rupees per ton. Okay. So the fear was that post the new year, the Chinese data points that were coming out there were indicating that China's reopening is not as good as anticipated. Now the change out there is that the Chinese reopening may not be that good. But the most important factor you're looking at from China, one is the regional prices and the second is, are they exporting more? Now the total exports coming out of China in May 2022 was around 7 million tons. That number in the next few months have slowed down to around 4 to 5 million tons. An ideal scenario from an India perspective is that the Chinese, they don't export more.
So more scarcity in the market and therefore it's just better for overall pricing.
Absolutely. So the fear is that, the Chinese will export more, but if that number stays in the vicinity of around 4 to 5 million tons, clearly indicates that they are not exporting more. So three big factors. One is Chinese prices are good. Second factor is domestic demand is quite strong. And the third factor is that domestic prices here in India, they have moved up by roughly around 10% odd. In
this is so far in 2023, in this quarter.
Yes, in this quarter, it compares with quarter 3. So that's good news as well.
So now let's talk about, how some of this is playing out in terms of the market sentiment. Tata Steel has had a lackluster last 1 year. So far, if you're looking at year to date, stock's not done much. Some of the others like JSW had a fantastic last year. This year, JSW has been correcting. Now, if you talk about the next few triggers, and you've also been saying that higher raw material prices are a problem, right? Because coking coal prices have been pretty elevated. So tell us what's happening on raw materials, iron ore, coking coal.
So there are two big factors that play out. One is iron ore and second is coking coal. Coking coal, no benefit for India. We import almost all our coking coal. So no benefit out there.
And prices are high?
Yeah, and prices, they cooled off, but then they bounced up again. So that is a worry, but that's not an India-specific worry. It's a worry for the entire global worry. Coking coal costs are going up. But when iron ore costs go up, it's advantage India. And let me explain that. I'll just give you a couple of data points. I know prices are up by around 60% from October lows. Two factors playing out there. One is Chinese demand reopening. Very good. Second factor is there is a bit of a scarcity that could be playing out because there were floods in Australia and there are some supply disruptions in Brazil. So because of that, iron ore prices are moving up. When iron ore prices move up, it gives a bit of a base to steel prices because iron ore is an input for steel. And in India, the pricing of iron ore is relatively cheaper in comparison to the globe. So there is a bit of a discount on domestic iron ore in comparison to what global iron ore is going at. But the steel prices are moving in tandem. So it's great news. So you're getting the benefit of higher steel prices.
Expanding margins.
But yeah, the spread expands out there. And companies like Tata Steel as well as SAIL, they are getting all the iron ore from their own backyard.
Yeah, they are completely, it's all in-house.
They're completely integrated. So when iron ore prices move up, the delta plays out for both of them in particular. For Tata Steel, the problem is last quarter was disappointing and the Europe problem will continue for the next 2 quarters. There's a bit of a shutdown as well they have out there. So Tata Steel's problem is a Tata Steel specific problem. But remember this, if iron ore prices go up globally, it's advantage India steel producers. Coking coal, it hits everyone together. And one more point, that some steel makers, when prices fall in China, they make losses. So effectively, they have to increase prices to at least make some money. Otherwise, you are running the facility at a loss. So whenever that happens, you always get hope that now the cycle is turning.
Okay, before we talk about who's saying what on the street, there's also the export ban, right? What's happening with that? And therefore, there's an expectation, I think, that prices domestically will start going up. What do you make of
So I'll tell you what, that export ban came in May and that came out of nowhere. So everyone was quite disappointed because that export avenue suddenly got taken off. But in November, the export ban was pulled off. So quarter 4 will be far better for a few reasons. One is prices are up. Second is volumes will be up. It may not be very, very profitable, but at least your operating leverage is playing out. Because that export avenue has reopened yet again.
So at least you can supply some to the international market where prices are anyway pretty high.
Currently, that is helping out, and international prices as well are holding up. So quarter 3 will be far better than quarter 4 will be far better than quarter 3. So almost to give it. So this export avenue is for Indian steel companies.
What about domestic? So okay. The way factors are standing up, that is domestic steel prices.
They're good.
They're going to go up.
As of now, they're good. And one more factor that is supporting. Steel basically the pricing is a global. It goes according to the global environment. One more factor is there are various spot prices. For example, Europe. Where the spot prices are higher than what the contracted prices are. So that means when those contracts get revised, they'll have to go back to the spot prices.
The prevailing prices.
It'll move up. So that is the hope. So that is giving some bit of a support. That this was not just a China reopening, but global prices on the whole are higher. And one more point will be, I think that you also have been reading about, is that it's very unfortunate what's happened in Turkey. That the country has gone through this earthquake. But from a global supply perspective, there is some steel that will again go out of the system. So you have sanctions that are imposed on Russia, and a lot of that steel out there didn't come out. Ukraine went through a war, so a lot of that steel as well got curtailed. So from smaller pockets as well, there is a bit of a
supply crunch
that is there. And China has been talking about reducing production as well out there. But China, you always don't know what's going on there. But at least the smaller pockets as well, there's no incremental steel that's coming out there. So that's why India is perfectly placed.
You mentioned China. I mean, I was reading about how, because of their environmental policies and norms, there are some production curbs, but that's largely aluminum, right?
No, that's also steel, Surabhi. But the problem with China is it can flip on the dime.
You never know what you wake up to.
What's coming next. But yes, in terms of aluminium, for the last couple of days, we've been hearing more about that. So on aluminium, just give you a rough number, not very accurate, but it's around 65 million tons of aluminium is produced globally. 50% comes in from China. So China is again the market maker out there, because 33 million tons of aluminium is coming out of China. So yeah, that's one of the reasons why aluminium prices have been moving up as well.
Okay, now before we sign off, there's this JP Morgan report I think a lot of people are talking about today. They seem to be really optimistic on steel stocks.
Yeah,
what are they saying?
No, and Pinnacle has been really optimistic from the word go itself. You know, Credit Suisse was the other one that was quite bullish, but they pulled back their call a few months ago. But JP Morgan, they are very, very optimistic. They like a couple of stocks. They like Tata Steel as well as SAIL. I think it's because of the backward integration. And they've gone ahead and they have added another variable out there. They said there is lower institutional ownership.
Okay.
So if institutions start participating, that's what will give a bit of support to to these stock prices as well. And so we talk about valuations. Valuation wise, these stocks are trading pretty much in line on a price to book value. With what they normally trade at.
They've had a rough year, most of these stocks, so they've got that comfort of no major flip up in prices.
Yeah, but you look at it on price to book and you compare it to the last 5 years, it's pretty much in line. You know, JSW Steel is the most expensive stock out there. We already know that, and SAIL is the cheapest stock, but for good reason, because it's a government-owned company. You don't know what's going to happen next. You don't know when they're going to put a big capex plan out there. So that's the worry out there.
Like NMDC and their steel plant, things turned out.
So investing in steel stocks is more about momentum investing rather than valuations. And for now, it seems that we have some momentum with us. Here, the domestic steel stocks, the pricing, global pricing, and strong demand.
Okay, got that. So that's where the momentum is, and now you know who's moved the market today. It's all this talk about metal stocks, in specific steel, and you heard it right here on our digital piece here on CNBC-TV18. Nigel, thank you very much. I feel far more educated now, and I
hope it was helpful. I really enjoyed it. All these years of reading up and touching base with a lot of industry experts. I hope it's helpful, and keep writing to us. We'll be happy to answer some of those queries.
Absolutely. So watch the space. 2 p.m. every day. We're going to take